Hi traders, welcome to part 4 out of 5 on our 80% OE case study, Strategy Construction Practical. So what are we going to be taking a look on this part? We're going to be looking at step 4 on forward testing. This and more in this live trading session video. Hi traders, thank you for joining the Master of Markets team in supporting our vision towards spreading the truth of trading and helping you achieve consistent trading performance. It is Stu Narpan here, founder of Master of Markets Elite Trades Conference and the Traders Open Day. Okay, now welcome to our live trading session video on forward testing. This is going to be on step 4. That's what we're looking at. For those of you who missed the previous steps, highly recommend you guys to go and look at our Master the Markets channel. So Master the Markets channel over here. Let me see if I can quickly just bring that up over here. I should have got it right from the beginning. And there we go over here. Okay, Master the Markets 2010 is the channel, traders, right? 2010, since 2010 we've been going, that's why 2010. Swiftly moving back onto here. Let me just take a look quickly over here. So on forward testing, what are we actually taking a look at? Now, the first thing what we need to be looking at, in the last one, we looked at basically the backtesting side of things, the proof of concept of the strategy. Now here, once you're ready to go live, and that's what we do in forward testing with a very, very small account. And that's the first thing I want to say, start small, okay? Start small to show your proof of concept with that strategy. This is the most important thing. You're proving the concept, you're building your confidence and your conviction in the strategy in real time before you start to see how to scale up. Okay, looking at the sustainability of the strategy. Okay, that's the first thing I would say. And also, I just would like to remind you, one of the strategies that we were telling you in the last one was a 80% open equity strategy, was it not, traders? In fact, you can revisit here on our channel Master Markets 2010 under streams. Okay, now when you go under streams, you can see that in the previous videos in part 3 and part 2 and part 1, we were looking at the different ways on how you construct your strategy in and then test it in real time. And this is a real case study. I'm going to be showing you how the results look like in real time as well. Okay. Now coming back swiftly onto here. So let me just take a look over here quickly here. So as I say, that's the first thing. All right. Start small, proof of concept. You're consistently executing, right? And then you move on to what are you actually monitoring in real time. What you're really monitoring is with the TJ. Now, what is the TJ? That is your trade journal. Okay, your trade journal. Now, traders. Now, how does the trade journal need to look like? Okay, what are the headings? What are the columns you need to be tracking? Now, let me go through that with you. So over here, traders, if you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone. Let me just bring up this one, 2022. Let me go into the individual trading strategies over here. What you need to be checking in real time and tracking in real time is first, very simple thing, have a trade number column. That's very simple. Next thing is have an epic code. What do we mean epic code? The symbol code for all the any instruments that you're trading on. Let it be commodities, indexes, equities, currencies, doesn't matter, futures, options, whatever it is. Just put it under here, put the entry date, the exit date, right, where you exited the trade on, long or short. Trade management comments, right, where are you exiting and close, how are you trailing your stop loss, anything like that. And then you look at This ones you don't need to specific to each strategy that we are looking at. You don't need to look at that actually. And then what is another important column here is the percentage risk on each trade. What are you risking on this particular strategy? We take 0.5% on each one. And in terms of, you don't need these two columns here, then you need your entry, your actual fill, where did you actually get entered, and your stop loss that you put, which is your initial stop loss, right? And then after that, then you need to put your target price if you're putting it right from the beginning. All right. After that, these two columns here can be automatically calculated by putting the formulas in here in terms of your trade risk and your target. Final thing, where did you finally exit? And then after that, once that has been tracked, you will naturally get the profit and loss for each of the individual trades, right, in the raw units. And then you will get it in a ratio of expected and actual. Actual is what we are really mainly looking at, right? Now, once you've got that, traders, then what we are really looking at is after you're collecting all of that in real time. So you scroll all the way down and you look at the summary table for that strategy, okay? And the summary table here, what you're really looking and wanting to get is total number of trades you took. That's the first thing, right? For this strategy. And then you're looking at how many trades won out of that, which is above 0, and then losing how many. Your reliability, what's your reliability? Basically, your winning divided by a total number of trades. Total gross profit, total loss, finally getting the net profit, right? And then you want to measure your average profit, average loss. All this is, you can program all the formulas inside. And then after that, what you want to be looking more closely is your actual. This is what's the important thing, right? So your actual profit to loss, not expected. People talk about 2 to 1, 3 to 1. That's not what you're looking for. Actual profit to loss, and then you're looking at net profit, finally expectancy. Okay. These are the things that you need to be tracking in real time as you're forward testing your strategy, traders. Okay. Now, the other thing that you also need to be looking at is month by month as well, what the winning or the drawdown of this strategy is. Okay, in October and November, this strategy had a drawdown. Okay, all this you need to be tracking at. I would say if you were to take anything out of this in forward testing, especially, you really need to be monitoring very closely as a professional the drawdown. Go really deep into the drawdown. What you're really looking at is the peak to valley drawdown in your equity curve, right? What's the maximum peak to valley drawdown it had before it jumped up again, okay? And then you also want to be looking at your daily drawdown. So there's different types of peak to valley drawdown. So there's your monthly, which is what we're looking here. Then you're looking at also your daily drawdowns as well. Then you're looking at your trade by trade loss cluster as well. And then if you want to go even more deep, you're looking at your unrealized drawdowns as well. Institutions actually look at that and they call it NAV, net asset value, okay, at any point of time. Now, what I would say is usually the monthly ones, we usually will review it every quarter and see if we have exceeded our previous testing of peak to valley drawdown. Okay, we have to measure all of that and see whether you need to stop the strategy or not. Okay, so all these things you need to be tracking, traders. Okay, if you want a copy of a template of a journal, simple journal, you can always email us or contact us through TradingView, and then we can give that over to you. Okay, right. Now, once you've got all of that, then what you need to then do is collect it all into an equity curve. Okay, collect it all into an equity curve. Now, there's two main types of equity curves you need to be looking at. Okay, two main types of equity curves you need to be looking at. Now, what are those types of equity curve? Now, before I go on to that, let me just see if I can even show you. Did we plot this one on here? I'll show you another one where we've got the presentation version of it. Maybe even this, if we got LTR 2022. There we go. So it's something like that, an equity curve where you got that mapped up and pulling the data from the results over here, okay, of that particular strategy or accumulation of your strategy portfolio. Now, once you've done that, traders, as I mentioned, you're looking at two types of curves, okay? What are the two types of curves? The first type is what we call the cash curve, okay? The cash curve. Now, the cash curve is what actually happened. Now, before I come on to cash, I'm looking at system. System is what should have happened. What should have happened if you were to execute it flawlessly, like by a robot, okay? Like by a robot. Now, the cash curve is what you manually, let's say you're manually trading it, what you exactly did on the cash account. Even if it was by a robot, you still have to measure your cash curve as well. Okay, and I'll tell you why in a minute. So, manual or robot, you have to do it in real time. You have to measure the cash curve. Now, out of these two measurements, system is what's the ideal scenario, what will happen on the robot. Yeah. Now, what will happen is then traders, out of this, you get two types of curves, okay? One is called, as I said, your system curve, and then the other one is a cash curve. For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below. So for example, let me just go back onto the thing over here. If I were to take a look over here, you can see that if I were to measure the results, let me see, I think I did show you guys on the last time on this. If I were to pull that up here, right? Last time when I measured it, I think I did show you guys over here. Let me show you on the daily over here, right? So on the daily time frame here, if I were to maximize that, if I were to show you that one there, each of the trades, right, we are measuring whether how much money it made or not, isn't it? So you see over 25 over here, 25 over there. This was on the 80% OE strategy, remember? And all that you can look at on our Master the Markets 2010 channel, as I mentioned. And if you go under streams, look at all of that, okay? I would have talked about that, what we'll be testing, what are we forward testing, and all of that. This is a real-time case study. Now, once you've looked at that, as you can see over here, then traders, what I'm looking at is I'm mapping all of that out. So this is what we call, what ideally would have happened. That's what we call your system curve, okay? So if I plot it against capital over time, right? Equity curve, equity over time, then your system curve might look something like that, okay? Now your cash curve, what it would look like, traders, is something like this, okay? Most of the time, it might be lagging behind the system curve usually, yeah, for traders. Now you may ask, okay, why does that gap happen, Tiru? Why does this gap happen between here to here? What is the reasons for that? Now the reasons for that is, one is slippage. Depending on the broker account that you have or the broker that you're trading with, the execution is not that great and you get slippages, okay? The second thing is execution error. Second thing is execution error. First is slippage, second is execution error. Now, what do I mean by that? Execution error can be so many things. One is missing trades, right? Mainly due to, let's say, fear, greed, whatever, or you're not executing or getting out of the exits properly, greed taking over, all of those things, okay? Not being able to, pull the trigger out because you had a few losses from before, so missing trades, okay, over there. Now, another thing is wrong position sizing. This one can happen also, execution error. Wrong position sizing because some trades you want to take a bigger lot size to make up your losses, right? All of that anxiety, fear, greed, all of that can happen due to, as I said, fear, greed, etc. So many things. Sometimes you just forget, right? not be anything, just simply forgetting, too tired that day to place the trade. Or the other thing is life situations as well, right? Leads rise to um, execution error as well, like missing trades, stuff, moving house, you're so busy that part of time, moving jobs, anything that can be life situations. Now, because of all of this, what you start to get is a gap, isn't it? As I say. Now, what we call technically, and Mark Douglas in the Trading in the Zone, he called this what we call the profit gap. The profit gap, yeah? Now, you need to measure the profit gap as well, and that's why we do the two equity curves. This is the third point, to measure the profit gap. Now, the profit gap is measured not necessarily for you to chase behind the market to fill the gap, but is to help you towards consistent execution. Okay, to consistent execution from whichever point that you're in your cash curve, and to see how your system is performing, Because you see, traders, your cash curve might not be performing very well. But if your system curve is performing, what does that tell you? That means your strategy construction was good, right? Your system rules were right. It is sustaining in real time. It is just you and your psychology and your execution is not able to match up with the system. So it still gives you the conviction and confidence to carry on. But you shouldn't chase to fill the gap. Keep focusing on consistent execution. Then you may ask, okay, how do I fill up the gap finally? How do I make up those losses that I lost through my previous flawed execution? Very simple. You either start afresh thinking that is from point zero again, or you increase your capital size once you're confident. But the beginning part is measuring and monitoring all of that in real time, developing that habitual pattern. Okay? So those are the things that I will be saying that you should be taking a look at when you are here at the equity curve point. Okay? Traders in forward testing. Right. Now the next thing is then looking at the results. Now let me show you our results as you have seen already, right? And over here, let me come on to 2022 over here. You can see, right? Each of the tabs over here is for one strategy. The 80% OE was the one I was showing you, right? In terms of the charts over here, in terms of our previous parts over here that we have taken a look at, right? In part 3, 2, and 1. What we were looking at was that 80% OE strategy and how did it perform in real time. Now, traders, all of this I'm showing you right over here, okay, all of this I'm showing you over here and recorded on this journal is all in real time. We log this all in real time. It's shared in a public folder for all our paid members in our Dropbox, okay, and WhatsApp as well, all in real time. Of course, all the disclaimers are all there, saying that past performance is not indicative of future performance, and all of that is for educational purposes alone. Now, from that perspective, so this is all real that we can take a look at, and that strategy made some really good amount of cash flow in 2022. But as a professional, we never look at the profit side. We always keep measuring and monitoring our drawdowns, okay? And it made 21.86% on that strategy. However, just as I mentioned in the Society of Technical Analysis talk where we got invited to, I mentioned over there that in 2023, this year, it's not been that great of a run. Look at this strategy, right? Over here, right? It went through a big drawdown. And in fact, maximum drawdown it went through was 17.24%, right? Quite a huge drawdown on one strategy, right? Now, 17.24% of drawdown. Now, what are we looking as professionals? Whether that has exceeded our maximum peak to valley drawdown over 10 years of testing. Remember, I mentioned this in step 3, right? You need to know all those stats. And our maximum peak to valley drawdown over 10 years was about 14%. It definitely exceeded that. So at that point, what did we do? We stopped trading it. And then we go back to the drawing board, right? And understanding what has gone wrong, right? What has gone wrong? The most important thing as a trader, as a professional trader, is you must know when to stop trading your strategy. When is it not going to continue? Or what do you need to do to then continue trading the strategy? Also, if you don't do that, you might lose back all the profits that you've earned. Okay? So what did we do in real time, and how did we overcome it, or did we even overcome it, or did we stop it? What did we do over there is what we are going to be discussing in the next component, the fifth component, the last step, okay, which we'll be talking about in terms of optimization. What did we do actually to review and optimize? What are the factors that we looked at? That's what we're going to be talking about in real time, what we did to optimize the strategy, and what are the things that you need to look out for as well. Right. Am I getting any questions? I did get some on email and on phone as well. Not really nothing yet on TradingView, as I can see. What we really got on messages is, Turu, what are the stuff? Where can I get the Cribsheet template that you said is really good, that you laid out all the column headings and everything? As I said, over here, if you go on to our TradingView channel, Master the Markets 2010, where you can follow us, right? 2010, and I think it would be under our signature column over here, where you can get in contact with us. I think is that one there. If you were to just click on any of the ideas, let's say we took a look at this one here. If you want to get in contact with us, just go on to our signature section over here. Then you can take a look over here, this part here, right? You can book a one-to-one session, or you can also message us on TradingView as well. And then you can get in contact with us. If you want to find out more about the Smart Money Indicator, you can do that as well. Or go on to our website as well if you want to contact us. That will be over here, masterthemarkets.net. Okay, masterthemarkets.net, and over there you can also find contact us information over there, masterthemarkets.net. If you go on to contact us over here, and then you can then contact us as well. You can get the information from here, and then you can contact us to get the Cribsheet. Okay, hopefully that will answer the question. All right, I guess that's pretty much that from me, and running out of time as well. If there are any other questions, feel free to email us as well. That's no problem. Or message us on TradingView. We'll be happy to answer that. We're all here to serve passionate traders who are really looking for a sustainable, scalable, reproducible way of trading and building those strong strategies. All right, traders, that's pretty much that from me. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.